This is Tax Radio on Women Radio 91.7. Tax Radio is where we discuss everything, the ABC of tax. Today, we will be looking at the VAT collection channels. Yes, the VAT collection channels. And I have with me Mr. Adamu Muhammad Kudu. He's a head of e-services of the Federal Inland Revenue Service. How are you, sir?
I'm fine.
Thank you.
It's my pleasure.
Thank you. Good to have you again. My name is Tomu Okiwale Shonaya. Okay, so what is VAT? Let me start by asking, what is VAT?
VAT is an acronym for value added tax. It means tax on consumption. If you spend money, you pay that VAT. Its imposition is on Section 1 of our Value Added Tax Act, while the basis of imposition is in Section 2, while the exempt stroke zero rated from the imposition is in Section 3 of the Value Added Tax Act. So it is a tax on consumption.
Tax on consumption.
The more you consume, the more you pay, except you consume what is not specified in law as being VATable.
Okay. So what does the law say about VAT?
When you talk about law, you have to bridge some gaps. We have the extant law, the VAT Act. We have a policy surrounding the VAT, and then the administrative convenience of Federal Inland Revenue Service. As far as our VAT is concerned, is a multi-channel tax collection program where from manufacturing to distribution to consumption is being collected at those various stages. So based on the law, if you are manufacturing, you may not suffer any input tax.
Okay.
But where you suffer it, by the time you sell them out to the distributors, you charge them that VAT. You knock off anything you have suffered from that, and then you pay the balance. Distributor himself will also sell to consumers. He will now charge them that same VAT, but he has right to remove what he has suffered to manufacturer from whatever he has collected and remit the balance. That is the chain of our VAT collection. What we should note in between is, for the value added tax, the imposition is tied to a due date. Whatever transaction you do for a whole month, you report them within the first 3 weeks of the following month, not later than 21st. And when you are reporting it, you are filling a form, and that form is called Form 002, where you have to state every income you have, excluding the VAT. You have to state any item of exemption or zero rated in your transaction. You have to state any adjustment, but you must back up the adjustment with a schedule. Then you now identify the tax charge. From there, you also identify the areas where you have suffered one thing or the other as input tax, either from the purchases, either from import VAT and other segment, or through online. You adjust those ones before you now have value added tax payable. The law allows you to remove any VAT of the previous month that has not been recouped. That is, if you are in a refund position in the previous month, you can now bring it forward for offset before you now have VAT payable for this particular month. And you must pay them not later than 21st of the month following the month of transaction. What we should note is deductibility tax status. When I talk about deductibility status, I'm talking about the input tax. The law specifies that those items that have direct correlation with the output, that is the sales, the input tax on them should be allowed.
Okay.
However, if they are having some capital element in it, you should go and capitalize that under company's income tax.
Okay.
It should not be allowed as a deduction under the value added tax. The same thing, there are some other incidental expenses on which VAT must have been suffered. Those incidental expenses, they may be administrative in nature. The law says do not charge it as input tax to the output tax you already have, but rather you go and expense them out of a profit and loss account of income tax.
Okay.
So the law is clear about what constitute VATable transaction, what constitute zero rated and exemptions, what should constitute adjustments, and what should constitute input tax allowable under VAT to be expensed out of P&L and also to be capitalized.
Thank
so
you.
all these things, they are very clear about VAT.
Thank you very much. Mr. Adamu Mohammed Kudu is the head e-services of Federal Inland Revenue Service, and he just explained to us what the law says about VAT. This is Tax Radio on Women Radio. So what are the VAT collection channels?
VAT collection channel, the question is, it has two ways. One, either VAT collection on the chains and distribution of a taxable product, or the ones that have been deducted, how are they collected into the government cover? So I'll take them one by one.
Okay.
I've already explained that VAT is collected through the chain of manufacturing, distribution, and sales. Each channel, you deduct, you knock off what you have suffered and remit, up to the last consumer, who is the final consumer, who has nothing to deduct. Now, so it is collected on various channels of manufacturing, distribution, and production. The other collection channel has to do with agency relationship. Once you have VAT certificate, you are registered for VAT, you are agent of collection. But the agency status is normally spelled out. If you look at section 13A, you have agency status for MDAs, oil and gas. The same thing, whoever that is susceptible to collect tax must also do the same. However, if an MDA is dealing with a non-MDA, the law says MDA should not pay the VAT to the non-MDA, but rather withhold and remit. So it's the collection channel. The other one is collection service channel. The collection service channel has to do with these taxes we are collecting, how are they routed to Central Bank of Nigeria? And that brings us to this auto collect scheme. In the auto collect scheme, currently we are in banking sector and what we call cable undertakers. We're in banking sector. In the banking sector, software is applied. All the transactions going in there on a daily basis, they are being routed through a software. At the end of the month, is aggregated and remitted to CBN Direct.
Okay.
So that is the collection channel.
Okay.
So, and also we're having on this cable, DSTV, all those ones, they are also tied to this. We are moving towards, already, we started with aviation, where we deployed RV Collect. They are all collection channel.
Okay.
We are moving to hospitality industries, power industry, and communication industry. We are moving gradually.
Okay.
But for now, banks and what I can call cable, TV undertakers, they're already in the collection channel. So if you talk of collection channel, the question it is wide, but I've explained it in three ways.
Absolutely.
Thank you.
Thank you very much. You mentioned CBN a few minutes ago.
Yeah.
I think it's fair for me to now ask, what is the role of CBN in VAT collection?
CBN has about 5 roles, I can say. First and foremost, CBN is a taxpayer. They must deduct and remit tax based on their own transactions. Secondly, they are collection agent. When they are dealing with a third party, they are duty bound to deduct the VAT element and remit direct. Thirdly, they are monetizers. I mean, sole administrator of the exchange rate. Some of these VATs can come in foreign currency. We have to report them on national currency, which is Naira. So CBN has the role of monetizing them before we report them or account for them. And the last but not the least, they are what I can call aggregator. Do I use the word aggregator? You can use a better word. They are the custodian of the account.
Okay.
They are the custodian of the VAT pool account.
Okay.
Whichever sources the VAT collection comes from, they all must enter the same VAT pool account.
Okay.
So CBN is a taxpayer, is a collection agent,
monetizer.
is a monetizer, is the custodian of the VAT.
Thank you very much, Mr. Kudu. Now that you spoke about, you just given us the role of CBN as a You've mentioned, so they are a tax collection agent. That's
You're
one
right.
of the things you mentioned. Are there other tax collection agents? Or who are the tax collection agents?
Thank you very much. There are some that are by implication, they are tax collection agents. Once you are registered for VAT, you're a tax collection agent. But because of administrative convenience, the law now to look at the risk of maybe Ministry of Finance paying a small enterprise VAT of 10 billion to go and remit to FRS. It is risky. So for administrative convenience, FRS started with making it as a policy through circular that Ministry of Finance should deduct that VAT as source and remit. If the small enterprise has anything to claim in terms of input it has suffered, it should come up and request for refund. So later, Section 13 was enshrined into law, bringing into effect all MDAs to be tax collection agent for FIRS. And the subsection 2 of that particular section also gave power to oil and gas industries to be tax collecting agents. They are also tax collection agents. Whoever they are dealing with, no matter your status, they must deduct from you and remit, knowing fully well that they are the final consumer who's supposed to suffer it, and they are supposed to pay to the person that contracts them. However, the law says deduct as source and remit. The incidents, if they have any input tax to claim, they should seek for refund.
Thank you. This is Tax Radio on Women Radio. Today we're looking at VAT collection channels, and the expert in the house is the head of e-services of the Federal Inland Revenue Service, Mr. Adamu Mohammed Kudu. Thank you, sir. So how effective is this VAT collection channels in Nigeria?
Well, if you look at the roadmap is to have everybody in the collection channel. However, we suffer some setback, but the ones that are already in operation, they are very, very effective. In banking industry, we hardly lose any income on tax now, because as you are undertaking a vatable transaction, VAT element is identified and swept through the software and hanged on NIBSS. From there, it moves straight to CBN. At the end of the month, the total amount is aggregated and reported as collection. It is very, very effective, unlike olden days where it's whatever they want you to know that they will they report. You now calculate VAT on. This one now is already programmed and is moving in real time to VAT pool account. So it is very, very effective. And I wish every other sector could have been done like that. We will not be losing anything. And that's why you see the increase in VAT. We are over 1 trillion the last year on VAT collection. So it is part of the impact of it is very, very effective.
Thank you, Mr. Mohammed Kudu. What type of VAT deduction is collectible from oil and gas sector?
When we talk of oil and gas sector, we're having upstream, downstream, and then the oil services. The upstream, majorly their products are exempt from, because they deal in exportation of crude oil, and once you export, it's zero rated. However, there's what we call reverse charge. On the reverse charge, we're saying that it's not you that carry out the exportation. You do it through agent who transport this crude. You charge them VAT. Are you with me?
Yes, I'm listening.
You charge them VAT. When you remit, they also go and charge same thing and then do the adjustment. So, but one thing we need to note again is that is in relation to upstream. When you come to downstream, you're having the PMS, the petroleum, you're having diesel, and you're having gas, kerosene.
Yeah.
Petroleum, diesel, kerosene, they are exempted.
Okay.
They are not vatable. But when you come down to gas that is imported is vatable. But the ones that are locally produced are exempted.
Okay.
Are you with me? Then you now come to lubricants. All lubricants are vatable. You charge VAT on them.
Okay.
So you collect VAT on all the lubricants.
Okay.
But for PMS, AGO, all of them, they are exempted from VAT.
Okay, that's good to know. Tax Radio on Women Radio with Mr. Adamu Mohammed Kudu, who is the head e-services of the Federal Inland Revenue Service, and we've been talking about the VAT collection channels and how effective these are. So the question is, I want to talk about MDAs now.
Okay.
If an MDA fails to remit as at when due, what are the measures to be adopted by the tax authority?
First and foremost, an MDA is tied to a particular tax office.
Okay.
That tax office is duty bound to monitor the MDA in terms of their contracts, so that on a monthly basis they should know the contracts that have been awarded, those ones that are satisfied and ready for payment, so that the tax, which is the priority debt, is deducted and remitted. Where MDA fails to do that, first and foremost, internally we will blame the tax office, and later we'll send a letter to the MDA asking them to explain why they are not deducting. They have awarded so much contract because we have access to allocation to those MDAs from the federation account. So how they are spending it, we monitor it and tell them any gap we have. If there's a consistent failure in remittance of the VAT, we have authority to advise at Accountant General of the Federation to deduct at source. So sometimes we resort to deducting at source, although we have not been doing it too much.
Does the law permit deduction at source?
The law permits deduction at source.
Okay.
Because shall do every other things necessary and expedient for proper collection and assessment of the tax. That's our law. So this is part of it.
Okay.
It's part of the administrative convenience that we advise Accountant General to deduct at source. But before we do that, we must bring into book every steps we are taking with the MDA, including the transactions that are vatable which they failed to remit, and then we advise the Accountant General. We must be equipped.
Thank you, Mr. Kudu. So if a taxpayer fails to display the VAT deduction in their receipts, because I think they expected to do that. If they fail to do that, what is the implication of that?
That is tax invoice. Tax invoice is specified in the law section 12, but the failure to include it is covered in another section. Failure to issue tax invoice, that is failure to state the VAT element on the tax invoice, is 5,000. And whoever use issue the tax invoice and is not authorized is 10,000.
Okay, 10,000.
Exactly. Although whatever penalty we mention,
some people do issue and they are not authorized to do it.
Exactly. So if we are caught and convicted, you pass through this route of law.
Okay.
However, FRS Establishment Act specifies some penalties. So we can there are still offenses that cannot be traced to these two. We can adopt the FRS Establishment Act penalty on the amount.
Okay, thank you. So does bank charge VAT on savings?
In addition to what I've just said, we have any invoice which tax is not included. The law says we should charge 50% as a penalty.
If they have not included the tax.
50% of that particular, the cost of that particular goods and services as penalty.
Okay.
So it is very important that tax invoice be properly adhered to and tax elements clearly specified. You are talking of banks.
Yes, so does bank charge VAT on savings?
As far as the law is concerned, things that has to do with the People's Bank, Commercial Bank, all those things, those ones, they are completely exempted.
Oh, okay. What about commercial banks?
Commercial bank is on the borderline.
Oh, okay.
We'll come to that later.
Thank you very much. We've been looking at VAT collection channels on Tax Radio today, and Mr. Adamu Mohammed Kudu, the head e-services of the Federal Inland Revenue Service, has been taking us through everything we need to know. Do you have any message for Nigerians that are listening?
Thank you very much. We are talking of VAT. It's a VAT on consumption, which if you don't want to pay, do not consume. Because if you consume, you are supposed to pay it. So if you are paying and somebody is not paying, please expose the person. Because if you pay this tax, it will enable government to provide necessary services for you. So if you are paying, somebody is not paying, please expose the person. And again, all these IT solutions we deploy to ease your compliance. Take advantage of them and make things life easy for yourself. If you run into any problem, go through the help desk, go through the FRS website and see if you can seek redress there. If you cannot, go to the nearest tax office and then seek for explanation, and then you'll be given. Tax is now made simpler, so let's take advantage of it. Thank you.
Thank you very much. You heard Mr. Kudu there. Tax made simpler. Let's take advantage of it. He said IT solution is to ease your compliance. And if you have any queries, go to www.firs.gov.ng. Thank you very much, Mr. Adamu Mohammed Kudu. He's the head e-services FIRS. He's taking us through everything we need to know on VAT collection channels. My name is Tomu Okewale Shunaya, and this is Tax Radio. Have a good day.
Thank you very much.
WFM 91.7.